Good evening to all traders and welcome to another Elliott Wave Zone Cryptos. We've had a very big dip. Everybody on Twitter goes around and shouts, buy the dip, buy the dip. Okay, first off, we need to be very careful about understanding, first of all, what a dip is and what is not. This is not a dip, first of all. It's a mere pullback. It might end up being a dip if we see prices continue lower down. Now, today is a video dedicated to my community, and we're going to have a quick look on what you have guys voted on yesterday's poll. And that is going to be Ethereum and VeChain, VET. The truth is that I haven't really had the chance to do Ethereum as well over for a while. So it's a very good opportunity to go and assess what is happening. I will remind you, there is a main scenario and an alternative scenario, and many variations, I would say. The main scenario is not something I support because I'm bearish or bullish. It is purely there because of guidelines and how the structures are looking. Either of them, even the alternative, can take place. Now, the probabilities are the ones that give us the support of the main versus the alternative. And probabilities right now indicate, because you have not successfully broken above the previous high on BTC as well on Ethereum and VeChain, that we are still in a correction. So before we go into the charts, I want to remind you, you can subscribe, you can like the button, and you can participate in my community votes as well. Plus, none of this is investment advice, is educational, and you should always do your own research before you invest in any of these. Okay, these are just insights, informative, educational. And last but not least, don't forget that I do have my Telegram channel, and if you want daily updates, several daily updates, trading ideas, on-chain analysis, and other lot of stuff, and join the small but elite community chat, then send me a message and I'll sort out a trial for you. Now, let's go to the charts. I'm going to start with Ethereum just because it's, well, I'm not sure if it's an altcoin nowadays, but I will just consider it an altcoin since theoretically speaking it is. And then we're going to go to VeChain. Okay. Okay, so are we ready to start with Ethereum? I'm not going to go further out. There's no point anyway. Right here, right now, this is what I'm seeing and this is what I'm expecting, because guidelines tell us certain things and these things for now remain valid. Now, we have done, that might be a bit tricky on the log, but let me try. Will I be able to get it all the way down? No, I cannot. And this is one thing that is really annoying with the log chart. Anyway, let's put it back to the log. I'm going to tell you this. We're supposed to draw a line over here, and then we're supposed to draw an equal parallel line over here. I will try to make it as parallel as I can. That probably works. And then I will do the same right in the middle, just to express where the median line of this channel could potentially be. Okay, as you can see, or alternative, actually we might be able to draw a, hold on, maybe we'll be able to draw a pitchfork here. Hold on, maybe that will work better on a log if I find it. You can see that I don't really use it much. Okay, that should do. So we're gonna go from where, let's see, there, and no, that doesn't look like it's working. What if we did something like this? Hold on 1 second, let me just fix this. There, yeah, I knew it would work. Anyway, let's take the colors out. Okay, no background, boom. So this is what we see currently, guys. Okay, so What is really going on here is that we've had an extended move to the upside, and I'm putting my waves 3 according to guidelines and volumes, right? These are where my waves 3 are for now. So over here, you might see a lot of people saying that this is wave 1 and 2, this is 3, 4, and 5, and this is the first wave, and we're going to see a correction, and this is the alternative, and we will get to there. We'll get there. But for now, guys, with the volumes that we're seeing and the fact that we have not broken like above the previous high successfully, because there is no confirmation, okay, that we have closed actually above it. It looks like the 44.25, it's still a stumbling block, okay? If we don't get past that and we remain above it for like 2-3 days consecutively, or if it's not happening consecutively, then we need to remain above it like for a week or so, then the risk is more to the downside rather than to the upside. And that's the reason you currently see this as the main scenario, okay? Now, I'm not saying that wave 4 is going to come and meet this channel down here, although it's still probable. What I'm saying though is that there is high likelihood right now, since we return within this range, that, and once we break into this territory below for the 4K, high likelihood to continue lower down towards the 26.75. Okay, I will go closer to show you exactly what we need to pay attention to, what you need to pay attention to. Now I want to go quickly from 2 and 3 and look at this. The 23.6, it's a mirror pullback, guys. So when you are here deep, I'm not expressing myself anyway here, but this is not what a dip is. A dip is like something big, like 70-80%, okay, relatively to something, obviously. But if we look at this wave impulse to the upside, wave 3, we're not even near doing a pullback. You know, the pullback is at 70-73. Yeah, so there's still a lot of room to move down, a lot of room. There is also a lot of room to move up. But for now, here's what we've got: ABC 1, 2, 3, 4, and 5. ABC 1, 2, 3, 4, and we've had an ending diagonal in here that ended. Okay, so we've also got below this pitchfork territory as well, which I don't usually look at, but there you go, you have it. So it is still possible, since we've actually done this level over here, it's still possible to get all the way down here and still be positive, still remain biased to the upside, which means the alternative scenario is likely to play. But I will tell you what we need to look for this alternative scenario, and why it's not, of course, an alternative is because we are far from seeing that. Okay, that's the reason this is not the main scenario. Okay, so main scenario is that we are in a flat pattern, guys. You've got ABC, you've got ABC, and that is expected to be in 1, 2, 3, 4, and 5. It could be, well, let me actually check. Maybe we are in a regular flat. Hold on. The difference between those guys is how much of a distance we get above over here, and that is in wave B. So this is the one. We are above 105, so this is not a regular flat, okay? It can be either a running flat or an expanded flat. A running flat, it's more bullish because it means that we're going to get down to around the 38 or even 23% or so, okay, which means we're going to have a correction of around 70-60% or so. But it could also be something much smaller, and I will tell you how you can identify that. Or the expanding flat, it means that we're going to break below the previous wave A, where wave B started, and that means most likely we're going to go down to that level, okay, close to this pitchfork or anywhere below. Now there is a very, very, very simple method to understand where we're heading. First of all, obviously, in the short term, we need to break below 460, right? And enter the zone below the 4K. If we don't see that, then we remain bullish, okay? So what I was saying, very simple method. We need to see and count 5 waves. This is 1, 2, 3, 4, and 5. The moment you see 5 waves, there's 2 things that can happen. One, we'll continue up. And this is wave C going to be here, for example, a running flat, or it's going to be a case where we'll continue up for a pullback, then we'll continue lower down to do another 5 wave, because this is still 5 waves, and then we're going to get the C. Okay, so counting the 5 waves in this scenario, guys, is very, very, very important. Okay, now before we go to the alternative, I want to tell you that either way, if this is my 1 and this is my 3, and we assume that the 4 is down here, let's just assume it for now, right? You see this? I might add, which one? Let's add the 0 to 3 should be here. It's not. So let's just do this 0.23 and boom. We've already done that, you see? And again, comes at a very special level, which is where we currently are. So the next level up, guys, could literally be 7750. This is, I would say, when we use a longer time scale to project. When we use a shorter time scale to project, what we're going to do is measure wave 4. Okay. And our wave 4, it's going to take us around 10, around 11K. That will be equal to wave 4. Understand? But obviously we need to take into account all these levels: 538, 619, 773, 10, and all that stuff. Note that assuming that this is the 4, even if we go down now, the 7.5, whatever that level was, is still valid, right? Nothing is gonna take that away. Okay, but the question is, how long will it take to come, right? Will we see a correction first, then up, or will we break to fresh highs? Okay, so this is for the main. Now, I'm gonna go a little bit further out, okay? First of all, to show you this pattern over here, we've had 1, 2, we've had 3 internally, we've got 1, 2, 3, 4, yes, and you got 1, 2, 3, 4, and 5. And this is the ending diagonal, okay? It's a bit of an extended ending diagonal, but either way, this is what it is for now. And for the main, yes, of course, the short term, we are bearish. As long as we are below, I will tell you the exact level, 44.66. We are bearish as long as we are below that level. To me, that looks like 1. That looks like A, B, actually, 1 and 2. That looks like 1 and 2. Okay, and this is 3, so 4 and 5. Actually, let me just label it quickly, just so that we don't get confused. 1 and 2, and 3, 4, and 5. That, of course, could be minute. We'll see. It depends on how long it extends. And then the other one would be 1 and 2. You got 3 and 4, and we're going to get the 5th one. Now, every time you see 1, 2, 3, and of course 4 and 5 is expected, you can also assume most of the time that there is also an ABC solution. Okay. Now, we have a flat in here and continuation down the 4. We expect the 5th one down in 3. Where are we heading? I want to see the 1618 or 162. You see that is already done. That is already done. 2 comes exactly at 460. This is a very good cluster, so it might be where this wave is going to end. Okay, but as I said before, we have to remain below 44.66. Otherwise, that can be a simple correction ABC here, and we can shoot higher. Okay, don't underestimate Ethereum or, you know, what is happening here in general. Now, with that said, we come to the alternative. Okay, that instead, that is the end of the correction. That is 1, 3, and 1, 2. That is 3, 4, and 5. That can be 1 and 2 and 3. Some people say, but forget about this, guys. This is wrong. The volumes are not showing that we're in wave 3 in any way. That would be only valid if this is 1 and then you get 2, 3, 4, and 5. And only then that's going to be 1, 2, and 3, if that makes sense. Only then. And we need to see increase in volumes, which means fairly soon, we need to see that taking place. Otherwise, no. So, alternative. 1, 2, 3, 4, 5. That would be actually, sorry, that would be 1, 2, 3, 4, and 5. That will be 1. And then we would get 2, and then 3, 4, and 5. And we would still be in a scenario alternative where 4 ended down here. And we are seeing now 1, 2, 3, 4, and 5, which is going to be the last wave to the upside. Okay. And this is my main issue with BTC as well and Ethereum. The moment that we assume that this is 5 wave, it means that we are done. Technically speaking, we are done. Okay. What is going to somehow validate is breaking into that territory. Okay. And then the break of 26.46. There is a lot of room to move down and up, I repeat. But because up is price discovery, we can literally see that even now, it could be something like this, 1, 2, 3, 4, and 5, and then drop. For me, as I said, the alt season is not confirmed yet. Okay, I want to see it confirmed. That's for Ethereum. Let's go on VET. What do we have here? Okay. Similar scenario here. We are, of course, struggling to get past the previous all-time high over here. Okay. So this is how I'm seeing this. Okay. I see, of course, that we are done with 1 and 2 and 3, and we're expecting wave 4. The alternative would be like 4 is done, although it looks very weird over here. But let me tell you what I see and why. Shall we do the same trick? Let's do the same trick, because I think the pitchfork, there you go. It's the pitchfork and the Fibonacci together. Where are we? Well, we keep losing it. Yeah, there. So let's try this, and then supposed to go there, and then supposed to go there. Did I get it right? Hold on. Okay, that has to be here. That is fine over here, but we need to change this. There, I started liking the pitchfork. So this is what we currently see. Again, we have crossed below this line over here. And what we currently see is that we finished wave 3, according to the volumes, wave 3, according to the volumes, a wave 3, a wave 5, which is less than 3, and correction. Whoever turns around and tells you, oh, look, we're moving up. This is wrong, guys. That's why I keep telling, and I insist, a lot of analysts don't even look at volumes, okay? But there is something unfortunate happening, that because of how manipulative the market is, and we don't see the volumes, of course, they keep getting it right, but in reality, they're getting it right in the wrong way. Either way, these volumes are not confirming any sort of impulse, okay? That's what I wanted to say. Unless if it is a wave 1 or something, and this is again wave 1, okay? We're not gonna go there for now. Let's look at the main first. The main is that this is a truncation. That's why I have a wave A here, okay? And why I actually had it as a ABC, and I was expecting a flat, right? The reality is this, but the moment we turned and we entered in the X territory, I've changed this. And why? Because I was expecting this to continue a bit higher, okay? Because for a flat, we need to have 90% at least correction, and we didn't get that at all, okay? It would be around 22 cents or so. So we have done a mere, not a mere actually, no, it's not a mere, it's an actual dip. That's what is considered a dip. We have done about 79% correction here from the previous low, if we assume that, right? Which means it can only be an ABC. You might ask, now why is my A here? It's because I consider this to be a truncation, 1, 2, 3, 4, and 5, okay? Some sort of, you know, weird pattern here. And you might ask why? Well, the reason is simple, because this one can be 1 and 2 indeed. And this one can be 1 and 2, but this is definitely not 3, okay? So the idea here is that we cannot have 1, 2, 1, 2, 1, 2. That is the reason. It's a very, 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 very rare thing. Okay. And I really had this as something like this, okay, which is still possible, but not as much, which makes a diagonal or a triangle, you know, be A, B, C, D, E, for example. That could still be the case, by the way. I just don't like how much this expands above that level, which is the trend line connecting these two previous highs, because this in any other case could be considered an overthrow, but in this particular case it's just a bit too much. Okay, it's a bit too much of an overthrow. One candle will be fine, but this is way too much. Okay, that is the reason. But what could be the case is this. So imagine having something like A, B, C, D, and E. That is possible. And then further downside, or 1, 2, 3, 4, 3, 4, and 5, and that would be a leading diagonal. They will get 2, 3, 4, and 5. It's very unlikely it's going to be an ending diagonal, because we wouldn't go up to that top if we take into account this diagonal shape, unless if it would be truncated. But I doubt that would be the case. Okay, so now 79% for now, and re-entering this territory makes me make this my main, because and make it an ABC, which means we can expect a 5-wave leg to the downside. 5, 3, 5, ABC, zigzag. That's what it is. And what can we go down to? Well, if we assume we are done here, we'll be looking for the 62 first, and then the 100. Between the two, we can add the 79 as well. So it's the previous low. Okay, so I wouldn't be surprised if we see price going down there. But again, we need to see the structure breaking. And how we're going to see this? For now, this is it. Okay, we missed the top. So down here is one of the levels that we need to keep an eye on. Okay, the alternative is that wave 4 was done down here or down here, okay, as a truncation or something, but that would be something like a W, X, and Y, okay, which is very weird looking. So most likely I would support this more than the 4 pin down here, which means that would be 1 and 2, yeah, and that would be 1, and that would be 2. Over here, and then we see 3, 4, and 5. Okay, so 1 and 2, that would be some sort of flat over here, because you've got an ABC here and we've got an ABC here as well, right? We get a down leg, perhaps running, or any sort of not any irregular flat, because this is definitely above 105, and from there continue higher, guys. But as I said before, we need to keep an eye on volumes. We need to see volumes increasing to have a wave 3. Otherwise, we cannot have a wave 3. It's as simple as that. And this is the alternative. Obviously, there's not one alternative, but for now, this is what it is. Because I can tell you, hey, look, we've got ABC, we've got ABC, and then we're going to get a triangle over here, you know? Or, you know, we might do something like this, and our B is going to be here, and we're going to get a flat in the end. Or, you know, we might do an ABC here, which means we're going to turn into a W, X, and Y instead. And then we might get another one. It might be X and Z, the triple zigzag, and then we'll continue higher, or whatever. But what we don't want to see, hold on, we don't want to see this level breaking, which is very, very low, obviously. This is like 2.3 cents. I doubt we will ever get there, but I'm saying this is the invalidation level for now, guys. Okay, this is the invalidation level. Now, what I will do, as we did that as well, general rule of thumb, I do it all the time actually. Wave 3. Look at this. We did the 23. We went halfway through to the 38. So you see that it's a bit more bearish than Ethereum, of course, right? No question. So after the 85, and we are like, this is like much lower to where we are now, right? Nearly like 45%. After that, we go down to 4 cents. So you can imagine what a decline this can be. But as I said before, I don't think we're ever going to go below that level before. Again, below that. Okay. So, in case you like this video, guys, click the like button, subscribe, turn notifications on, because I post now. Will be posting more regular the vote for the community poll to vote what coins you want analyzed, and this is why this video is happening today. So don't miss the opportunity to leave your vote, because a few votes can actually change what I'm analyzing. If you have questions, leave them on the comment section. If you have an alternative scenario, feel free to post it, and but make sure it's pretty easy to understand what you're looking for, right? Because sometimes I see some comments and they just don't make sense, and it ends up being a lot of texts, a lot of messages exchanging, and then we don't really get the information out that most of the subscribers want to, which is, simple stuff to understand rather than going into discussions that make no sense. So I want to thank you for watching, guys, and don't forget, Telegram is live, has been for a while. You should reach out to have a trial. Take care and trade safe.